Hey there, it's Jared Hamilton with the Hamilton Group at Cherry Creek Mortgage. Welcome to another edition of Job with Jared. I've got my coffee. Hope you guys are having a wonderful Friday and ready for a good weekend. Wanted to let you know what happened with interest rates this week. And rates got worse. They continued on the path of getting a little bit worse that started last week. We didn't have a whole lot of economic data that came out, but the reason that interest rates got worse is that we saw a large amount of debt being auctioned by the Treasury. When we see that happen, there's a lot of supply that comes into the market, and if there's not a great amount of demand, then what that does is that causes the price of these bonds to go down, which causes the yield to go up. Those compete with interest rates, and so interest rates therefore then go up a little bit as well. They're still fantastic, but they're just off their lows. So the reason that interest rates got worse is because this week is because we saw the Treasury auction a lot of debt, and that wasn't just received really well. Stocks were also up, and that caused a little bit of pressure. Now we have seen a correction over the last couple of weeks, so interest rates have gotten a little bit worse. We did break below some very key fundamental levels. We saw interest rates get worse, and it moved below the 25-day moving average. That 25-day moving average could act as a support line, but once it breaks that barrier, which it did, then it acts as a ceiling of resistance. So it takes a lot more to break through that. Rates did rest right on the 50-day moving average, however, and that's a good technical symbol or technical sign. So hopefully we've seen the worst of the deterioration, and that interest rates don't continue to get worse. Now, overall, I don't think interest rates are getting a lot higher anytime soon, and here's why. We see what's going on with the euro drama. That's going to continue, and it's going to continue for quite some time, so that will keep interest rates probably around these levels. We're seeing the election, and that just doesn't breed a whole lot of good, happy feelings in the economy. It doesn't cause people to go spend a lot of money. There's a lot of uncertainty, and so that'll keep the U.S. economy pretty stagnant. The U.S. economy is just stagnant already. And the global economy is showing some stagnation as well. And then there's also the talk of QE3, and until that happens and until it's announced, we probably won't see a big change in interest rates. So bottom line is, rates are still fantastic. A little bit worse, but they're still really, really good. So next week, I'm going to be commenting at a little greater depth on what I'm telling my clients right now when they ask, hey, should I lock? Should I wait for interest rates to get better? So watch for next week's Job with Jared. I think you'll find it interesting and hopefully very helpful. Hope you guys, again, have a wonderful weekend. Thanks for joining me. As always, if you have any questions, please give me a call. Have a wonderful weekend. Bye-bye.